Good afternoon. Today is April 8th, 2019. This is Trader Tim from E-mini Mind, and we're doing a Monday market analysis video for the E-mini S&P. Now, this week we've got a couple of scenarios that could take place, and I wanted to walk through what I think might happen here this week in the ES. So, a couple of things that I'm noticing. The first, on the daily chart here, we are sitting at the negative 23% target of this larger daily long, as well as the little guy I drew up here from just last week. And whenever we are sort of hitting a negative 23% target, I'm always considering in the back of my mind, you know, is there going to be a larger pullback, either to the next 50% retracement or just some sort of a dip as traders sell up here at highs. Now, if we scroll down a little bit or scroll up, we can see that the negative 61.8 target is actually above the all-time high in the ES. So if I zoom out, that's back here, 46 and a quarter. And that could, it's close enough to where if we run higher here, it's going to be, a quick, thin move with not really a lot of sustained long-term investing, more of just a chase from shorter-term traders. So, if we make a run up to the all-time highs, I would expect that to be met with some bigger selling up here that might take us into a deeper pullback. So, the market's, you could say it's overextended, or you could say we've gone on a nice rally, but either way, I'd be looking for the market to make some sort of bigger move up here, and that could be to the upside or to the downside. I know that's kind of, well, one way or another, but there's other times where you look at the market and you say, there's a strong likelihood that we're just going to move sideways. And if we can identify, okay, here's an area where we're more likely to just chop around, therefore I want to stay out of the market. And you compare that with, okay, here we are at an area where we're likely to get some decent movement. And we do have Jerome Powell speaking later this week. The FOMC minutes on Wednesday, and consumer sentiment on Friday. So between a couple fairly important news announcements and being up here at the negative 23% target with a lot of these gap ups taking place on the way, you know, it's all kind of cultivating to a week where I'm saying, okay, I'm going to be looking for some actionable trades here, and obviously assessing each day as it comes. But I try to kind of come into the week with a little bit bigger picture, and that's how I start from the larger time frames. Then you can drill down to the smaller time frames, because intraday, as I'm day trading, I'm not really focused on the bigger time frames that much. It's okay to be going short intraday, even though we're in an uptrend on the daily chart. The other thing I wanted to point out is over here on the market profile. We have, for the first time since this run up, formed a point of control that's lower than the prior day. So even though today was bullish, and actually a bullish engulfing, because the high is above the prior day's high and the low is below the prior day's low, even though that was the uh, end result, and we even had a higher close than yesterday, we ended up with a lower point of control, or Friday rather. So if I were to come back, we'd have to go all the way back, I think it was March 27th, where we have a higher point of control. This one is above the prior one. Had the big gap up, another rally, another gap up, another higher point of control, and then was all the way down to this day here, and that was the 27th of March, I believe. So that's a change in the pattern. So I'm looking for things that stand out because they're different than the last, week, couple of days, prior trend, and this is one of them. So it doesn't mean that we can't go higher from here, but with these gaps below us, you can see we did dip in a little bit to Thursday's Thursday's unfilled gap, but we didn't quite fill it yet. And then we have all of these gaps, areas that we have not traded here in yellow, and then the blue is the close. So if we start moving lower or get any kind of pullback, we should be able to get momentum to the downside. And if we start moving higher and we inch closer, we're at, we'll just call it 2900s on the ES, which, big round number, also happens to be an area that you could get some resistance at. If you come down to a big round number, it could be an area that you get some support at. So a couple of reasons for keeping an eye on a pullback to develop. And if we go higher from here, 50 points is not that much. Some of these candles back here, are close to 50 points. And if we could do that in a day, if we start running, the media gets going, and short-term traders get excited, start buying things up, next thing you know, it's all-time high in the ES, and the the media is going crazy, and a lot of people start chasing it, and the smarter investors or smarter traders are taking profits or closing out of long positions, and all of a sudden those heavier, bigger weighted positions, the traders who got long down at lows, who are taking profits up at highs, who have much bigger sizable positions compared to the traders who just jumped in right at highs, all of a sudden those are outweighing the new long positions that are coming in, and then the market starts to fall down, and then you start to hit some stops. That accelerates things. You start to fill some gaps, and then all of a sudden you're sitting there scratching your head because the media was just saying, market's at all-time highs, and then the very next day or later that week, it's, Dow down 700, and everyone, the amateurs or those who haven't been doing this for very long, just sit there wondering, what went wrong. So, all in all, try and see both sides of the coin if you can. Put together a couple of scenarios so that you're not caught off guard. You don't want to get so technical into the weeds saying, well, we're at a negative 23% target. We cannot possibly go higher. We have to go down. And you don't want to sit there stubbornly shorting Tuesday morning when the market is, going higher and failing every single short setup. You need to have some flexibility, but you also don't want to be caught off guard. If the market does start going down and you don't have any sort of idea or levels that you can use as possible targets or pullback points. So just drawing up the next retracement setup to get an idea. Okay, 2844s. That kind of puts us down here below or kind of right at the bigger gap up that we had. So filling that big gap would fall in this area. We've got some support back here that we could land on. So, just get an idea of some ranges and some areas that we could move around in can be really helpful. So that's all I have for you today. Tomorrow we'll be doing, as always, Tuesday live trading session. You can check that out at emoneymind.com/VIP. Thanks, everyone, and have a great week.